Hi guys, this is Dean. Today we're gonna look at the recent IPOs tab on Koyfin. If you're interested about Koyfin, you can get a 20% discount in the link in the description. So in the market dashboards of Koyfin, you have a tab called Recent IPOs. You can find it right there. These are part of the list of pre-populated or pre-built market dashboards you have on the Koyfin set of tools. You can't really edit this page. It's there as it is. It's static. You can't really move it around like a dashboard does. However, it's pretty interesting what you can find, and the more I've been looking at it, the more I can find new ways to kind of use it. Because the thing is, I've never been really that interested about IPOs, to be honest. I'm mainly focused on, existing stocks that have been there for a while. But there are IPOs coming in every year. Now, the thing with IPOs is that there's been a shift in the last decade or to 20 years even. There's less and less IPOs in the US and all over the world. More and more companies before they become public. So to explain, an IPO is an initial public offering. It's when a private company, so you have a company and you want to go on the stock market. You want to be listed have your stock available on the market. And you would do that because you can then attract new capital to your company. You can raise funds with new shareholders that would buy the stocks that you issue. It's called the primary market, when you initially offer your stocks on the primary market, and then shares are then sold between investors on the secondary market. Okay, this is finance 101. Now, the thing is, there's less and less IPOs, right? Less companies go public. They go to private equity funds. That's been the big shift for a while now, where you have less and less IPOs because the companies that are private, that are not public yet, preferred to go to a private equity fund to get cash from them instead of going to the public directly. The reasons why are numerous. First of all, to have a traditional IPO, for example, on the New York Stock Exchange or the NASDAQ, it's very costly. It costs a lot of money, first of all, to the exchange directly, but also to the investment banks that will set the IPO up, like for example Goldman Sachs or JP Morgan. All these investment banks will take care of the IPO for you if you're the owner of a company that want to go public, and it's not for free. They will do it for a lot of money. And also it's in terms of regulatory burden, it's insane how much it can cost you in terms of disruption to your business, because all your business, if it was a very simple business, suddenly becomes a very complicated business, because there's so much regulation that goes around being a public company that overnight the administrative burden and regulatory burden is up tenfold or 100-fold. So you need an army of accountants, of lawyers, and it's a big deal. So you don't just go public like that. It takes a while, and only a certain sizes of companies can actually stomach this kind of hurdle. And the other thing is, when you go public, right? I'm talking about the reasons why less and less companies go the IPO route and go more the private equity route, is because when you're public, you are facing the public, and that means that the public is watching every quarter, right? You publish quarterly reports. Probably before that, you were only publishing annual reports, annual accounts. And the shareholders were not many. and they were probably also involved in the business directly, right? They're the owners, directors, and they were there for the long run, right? They were there, they could see, okay, maybe there's a bad 1 or 2 years right now, but the fundamental of the business is good and it's strong and it's going to go through this. Maybe the medium term, there's something going on in Asia which makes the business slow down a bit, but on the long run everything is fine. Well, in this situation, the owners, right, would stick around. They know they're here for the long term, right? However, in the public markets, people are very short-term focused, myself included. I mean, first of all, you report quarterly. Every 3 months, you have to go through a full set of accounts, audited. I mean, this as personally, I am a chartered accountant, so I know it's a huge task. It's basically you're running around the clock just for the accounts, which makes you tend to forget how to run the business in essence. That's how much a burden it is. And if you miss the expectations of the analyst for a quarter, your stock will get halved. Okay, you could have your stock down 50% just because you underperform the analyst estimates in your EPS by a couple of percentage points, right? Which is meaningless, right? It doesn't mean anything, right? The analyst maybe over forecasted a bit your revenue, your top line, or your EPS for a particular quarter, and then the business is running along as usual, but your stock is down 50%. Just because of that. So that's why people start to, okay, we're not going to go public. We're going to go to the private equity, which is the huge pools of funds that ask less question. You've seen them all. They all have the people in private equity all have their Patagonia vests. I mean, we've all seen the memes. Anyway, I'm digressing a lot. My point is less and less IPOs, unfortunately, and I find this a big problem for me because I want stocks. I want as much stocks as possible. I want all the companies to go public as much as possible, so I have a full breadth of options on the buffet for me to trade with. But it's not like this in reality. But thankfully, there are still some IPOs. For example, when you go to the Koyfin page here, it shows you that it pulls the IPOs that happened in the last year, right? So if I do by date, so we have this table here, I can pull up the latest IPOs by date. So the latest one was on the 26th of September 2024. If I sort the other way around, it goes back to October 9th, 2023. So I think it's a 1 year period, and there's plenty, as you can see. Now, I'm not sure if it's just the US. It's definitely US and ADRs in the US, but well, look here, there seems to be a French company here. So it might be all over the world. No, that's an ADR. So I think it's just the US, but with ADRs, meaning ADRs are American Depository Receipts, which are foreign companies going to list on the New York Stock Exchange, okay? So as you can see here, Abivax Société Anonyme is a French company, obviously, or a Francophone company, hence the name. But it's a biotech company apparently, who went to the NASDAQ in the US to get a listing there to attract American money, obviously. So you have American companies and ADRs, and you have a scatter plot right here. We'll go first through this table here, which is very cleverly designed. We have the name here, the ticker, the industry, the market cap at current, I believe, the last price, the percentage change over 1 day, obviously the IPO date, the IPO price. So as you can see, this stock went from $4 to 1 cent. Hence, since the beginning of the IPO, it was down 99%. So basically 100%. Okay. It offered 1.7 million shares for a total of $6.8 million. And that was last year, bang on last year, October 9th. We are October 5, 2024 right now. And so it started initially to raise $6.8 million. And right now that is worth 300 grand. So it lost basically everything, 100%. So Gamer Pakistan Incorporated, probably a quick cash grab, right? We have another creative businessman maybe in Pakistan who was looking for cash and exhausted all his traditional pools of cash, all the banks. He scammed already everybody, so he might as well try to scam the biggest pool of money in the world, which is the American investors, and that didn't work out. Okay. What else do we have? The percentage change on the first day, which I guess you could say it's meaningful. I don't think so. Percentage change first day, since first day. The revenues, $0 for this company. EBITDA, the cash per quarter, the debt per quarter, and the EV to sales in the last 12 months. And it's funny they use the EV to sales, so the enterprise value divided by sales, because it's an alternative to use the PE ratio, really, the price per earnings. And it's obvious why they don't use the PE ratio, because to have a positive PE ratio, you have to have a PE ratio to begin with. You have to have EPS, you have to have profits in your company. And obviously, most of the IPOs, right, we've seen recently, don't have any profits and sometimes don't even have revenue. So it's quite funny. Obviously, this company didn't even have revenue because you don't even have a ratio, because sales is at the bottom of the fraction here. And enterprise value is another measure to calculate the acquisition of a business. So yeah, it's a clever way to use that ratio right here. It's very pertinent, very relevant. So this tab is kind of getting me a bit excited. I want to look at IPOs now. I'm gonna keep tabs on IPOs because it's quite meaningful to have the most important information in the table, and the scatter plot is useful because it shows you. So on the x-axis we have the percentage change, the y-axis, the percentage change since the IPO. And on the x-axis, we have the market cap. So obviously we have these outliers here, around 20 billion, 12 billion. That's Reddit. I'm gonna skip these and I wanna focus on this area right here. So I'm gonna skip all of these there and I'm just gonna zoom in around the 4 billion mark. So let me just change the value to 4 billion maximum. Okay. I might even go... Okay, let me just remove the top here. We have one outlier, which is nano nuclear energy, went up about 383%. Okay, it's a bit of an outlier. I'm gonna put a maximum value of 100%. And a maximum value here of minus 100%. Okay, so this is a bit more telling. First of all, we can see anything below 600 million, pretty negative. The IPO didn't work out for these guys. While after that, it's pretty, well, we could draw a line, an upward line, meaning that the higher market cap, the higher basically was a positive IPO where the stock actually went up. Now let's focus in on the below 400, right? Let's see if we can see just the 400 million. Okay, so now I've zoomed in. Anything below that had a market cap or an IPO below 400 million has been a disaster in the last year. I wouldn't have known that if I didn't have Koyfin, actually. That's why I'm finding this tab really, really useful when you really look at it. Anything below 400 million has been negative. And the reason why I put minus 100% is because if you IPO at a certain price, well, I could be wrong, but if you lose 100%, you're basically gone to zero, right? The stock has basically gone all the way to zero. And if we look at anything below 20 million, they've all gone to zero. That's insane. Okay, let's put 20 million. Yeah, insane. They've all hit the minus 99%, which means they've all gone to zero. That's crazy. It's that's what I was telling you earlier. A lot of creative businessmen, they've been very, very creative in finding pools of cash here and there. And the last big pull is to try is obviously the stock market. However, the stock market is very quick to figure out what's really going on, and if it's just a cash grab, they will get punished instantly. And I think that's what happened here with these low market cap stocks. They've tried their last scam and didn't work out. Very interesting. So guys, I invite you to look at the recent IPO tab on Koyfin. It's very instructive. And I'll see you in the next video. Thank you.